Hi there, and welcome back to another episode of Responsible Innovation 100. Today we have Charlie McDonald, who's an associate at the Giant Leap Fund, which is Australia's first venture capital fund that is 100% dedicated to impact ventures. And Charlie is a key team member, so I'm stoked to have him with us today. Big welcome, Charlie.
Thank you so much. It's a pleasure to be here. Thanks for inviting me on.
Okay, so general question, tell us about yourself. What's your average day like if you have an average day?
Average day. So I'll wake up, do some sort of mindset start to the day, whether that's going for gym or going to the walk, Edinburgh Gardens in Melbourne with my partner. Then I'll get into my work at Giant Leap. Giant Leap is an impact venture capital fund, looks for startups to invest in that have impact embedded into the mandate. As an associate, my role is very much around the investment side of the business. How my role breaks down in helping the fund do that is in finding deals, doing deals, so actually writing investment papers, legal review, those kinds of things. And then once we've invested into a company, helping them to be successful. So there's a whole lot of things that happen in an, I don't think there is kind of an average day. It's a mixture of deep work. There's a lot of founder meetings. There's a lot of writing investment papers. There's a lot of content. So I also write a lot of content for our newsletter. So yeah, that's about an average day.
What's on your mind at the moment?
What is on my mind at the moment? I mean, from a very high level, there's so much on my mind. But at a very high level, the climate crisis, as kind of it takes up a lot of my emotional and professional energy. It's very pleasing to see, things in Australia like a Labor government, and I think there was some news about a new department specifically focused on climate change announced recently. So that's very big in my headspace at the moment. Another big thing is we're working on diversity and inclusion policies internally, and so my mind has kind of been honing in on that area as well, which is something of great importance, but it's so interesting to get into kind of the nitty gritty of how you actually do that within a business.
Being in a VC fund, I'm curious to understand your view in terms of what is the purpose of capital in society.
Yeah, this is an interesting question. You can look at it from a lot of angles, and I'm just going to give you my one angle, and not claim that it's the only angle. But I see the purpose of money being to buy the future that meets your needs and desires.
Hmm.
And so it's things like shelter, safety, socialization, I don't know, soy sauce. There's so many things that are kind of in that bucket.
Mhm.
And for the last century, we've done a pretty good job of deploying capital to meet our needs and desires, but we've just done it on a very short time frame. So we have thought about next day for sure, and maybe the furthest we've ever extended is 5-10 years. We've also done a really good job of deploying capital to benefit certain pockets of the world where human health has increased dramatically, and it's just been compounding year on year over the last 100 years. It's not all bad. We have deployed capital in service of good needs and good desires, but it hasn't really been with a view to a view on what our limitations are. So a view on what our planetary boundaries are. Single-use plastics were just like incredibly convenient and did away with inconvenient washing. We deployed capital to pull coal out of the ground, which made energy so cheap that we just never thought about, I'm going to heat my second pool or, whatever unnecessary energy cost you were doing without a second thought to the carbon cost. I think what that has led to is the purpose of money. We've been thinking about it with too short a time frame for too long. And now we're facing the most expensive problem we'll ever face, which is trying to address the climate crisis. We need something like $9 trillion spent annually. We're currently spending $6 trillion annually. That's on a scale of multiple Australian economies. I think it's like 7 Australian economies worth of spending to replace fossil fuel energy generation with renewables, to shift to more circular economy systems, shift to regenerative agriculture, all of these pretty expensive transitionary things that we need to do. And so, yeah, I guess the role that I see VC playing in all of this is that VC makes things faster and cheaper. If you think about it, it is inventing new ways of doing things that are better, that have value, and it's taking those small ideas and scaling them up massively and disrupting markets, but it needs that kind of early stage capital to catalyze the improvement. And so how I see venture playing into things is it's going to play an incredibly important role in this next phase, because we have such a short time to solve the crisis and we have this large amount of money we need to spend on it. So VC will be critical to making sure that the amount that we need to spend on it doesn't outweigh our ability to actually afford it. So yeah, it's making things like renewable energy more economic. It's making things like regenerative agriculture more economic. Yeah, I just think there's a lot of the things that we need to solve the climate crisis just don't exist yet. So it is also going to bring those things to market.
The difference between impact VCs versus traditional VCs. What is an impact VC versus, and how does it differ from the mainstream?
Yeah, so I see, I guess I want to start with like how I view impact, because it's not for me a static category. Impact is actually kind of a dynamic category that it basically means improvement. Like we are trying to shift where we are today to something that better serves our human and planetary needs. And it'll continue to shift. For me, the mainstream, you could use a synonym of like commercially driven VCs. We sit on the impact side of commercially driven VCs, and we're looking to pull commercially driven VCs towards impact. And as they do that, we'll continue to be at the frontier, looking for ways to deepen impact, be more authentic about impact, and actually demonstrate results. What I think the main difference between traditional and impact VCs is really three things. The first one is actually having an impact intent, and that means explicitly stating what your social and environmental outcomes that you're hoping to achieve are. The second thing is, once you've stated that intent, actually having a plan to invest into companies that have the ability to generate those outcomes, and then measuring those outcomes. So you're actually implementing your plan and measuring the results. A third thing that I guess this one is slightly more optional. You can be an impact VC without doing this, but I think impact VCs who are doing the really authentic work are also reporting publicly what the results of their impact investing in some sort of format that's transparent and can be reviewed by the market.
Next question then I have is, where are we at with traditional versus impact VCs? Is the mainstream committed and ready? Because we do see a lot more now in terms of mainstream VCs also talking a bit more about broadening the way that they measure performance and the way that they invest. So I'm curious, are they committed?
It's a good question. I think that the question of their commitment and readiness it's not necessarily an intrinsic question. For me, it's like, are they being forced into adopting this state of mind by external factors? Most people want to do good, but a lot of people are also still very single bottom line. Stakeholder value is the only thing I care about. And so I think that those individuals and organizations out there are being forced more and more by investor pressure, consumer pressure, and employee pressure to adopt impact thinking as part of maximizing stakeholder value. So yeah, we're seeing things like more VCs releasing their ESG reports. These are commercial VCs, and they're releasing their ESG reports as they're going out to market, raising new funds. You can tell that they're about to announce that they're raising a fund because they've just released their ESG policy. And so you can tell that they're responding to investor demand for the investor question: how are you acting responsibly, and how can I be comfortable that my investment dollars are going towards things that are good for the world? So I think that's an interesting data point that we're seeing more and more of. On the consumer and employee side, there's just so many surveys out there that talk about kind of 70, 80, 90% of consumers wanting brands that help them to live more ethically, and employees wanting their organizations to take a stand on climate change and, you know, be more equitable and all of these things. So I think there's heaps of evidence around kind of shifting attitudes in these very key stakeholders that make organizations work. And we're also just seeing, I think, looking ahead, the proportions of those survey results get higher and higher the younger you go in generations. And so we're seeing the kind of the transfer of wealth that's happening generationally over the next decade or so. I think the stat is somewhere around the $50 trillion mark of wealth is being transferred to millennials and Gen Z, who really hold their organizations and brands accountable because they're facing down, the 2050 catastrophe scenario as something that they, will actually have to live through. That is translating into a much higher degree of caring about these issues and acting in accordance with it. And so mainstream commercially driven VCs, I think, are having to respond to these kinds of trends and see that the economic imperative and the moral imperative to do good are becoming one. They're just becoming the same thing now.
What capabilities do you think mainstream VCs need to have to authentically transition towards making impact?
There's probably three main ones that I can think of. The first capability, linking to what I said before about kind of what's the difference, that whole piece around your impact intent, implementation and measurement, and then communicating. I feel like that is a capability in itself, actually knowing what frameworks to use to measure, how you're going to match it to kind of standardized forms of measurement, and then how you report transparently. It's not easy. And so I feel like it's an important capability. And I feel like we're getting up the curve of understanding how to measure and how to report. And the more we share with each other, the more we'll all get better at it. I think the next capability is actually embedding impact into processes. For example, in kind of venture land, you're investing into companies that have impact on multiple dimensions. So the what the company does, the impact that's generated by the company existing, and then there's the impact of how the company does things. So, all the stakeholders involved, their diversity and inclusion, outcomes within the business, their supply chain, all of those things. And so I think there is a capability for commercially driven investors to have kind of a playbook for embedding impact into their investments into companies. So having impact terms, commitments to implement sustainability and diversity and inclusion policies as the next evolution of capabilities for impact interested investors. And then the third capability is one that I think there's a real capability that's required in impact, in particular, around collaboration, because it is not easy. So the first part is it's not easy, and so it helps to have more minds on the problem. And the second thing is it just makes total sense, because a lot of the impact goals that we have are not singular goals. They're shared goals about the planet, they're shared goals about society and our population health, and making sure that we've got equitable outcomes. The reason that I think it's a capability is because I think a lot of commercially driven investors are so set in competitive thinking that it's hard to, it's not a muscle that is used a lot in venture. But I think it's a muscle that can be built and is extremely beneficial in impact.
Maybe we can start with Giant Leap's philosophy and approach to innovation. What is it, and how does it differ? Does it differ from your peers?
Yeah, for sure. I'll tell you about the philosophy and approach, and then I'll comment on peers. So Giant Leap is an impact venture fund. We invest into highly scalable businesses that have impact embedded into the business model. That impact is linked to every single dollar of revenue generated. We can see a unit of impact being created that's linked to one of our three key themes, which are sustainable living, health and wellbeing, and empowering people. We also look for impact that's measurable, so it can be quantified, and that the founder has impact intent. The three impact themes that we have are pretty broad, but we think that they are inherently linked. So on one hand, we've got sustainable living, the ability to live within environmental bounds, but we believe that the social side, so the health of people and the equitable outcomes of society, are so important to accepting some of the changes that we'll need to make in order to live within our planetary bounds. So it might seem like they're kind of three distinct things, but we see them as very much linked together. And it has the overall outcome of happier, healthier people living in a stable environment. The comparison to our peers, we were actually inspired by a lot of the work being done. Giant Leap was founded in 2016 at a time where there hadn't really been an impact venture capital fund with a broad house of impact issues that was looking for the same commercial returns as any other commercial VC. That was kind of an unproven model in Australia. It was built on feedback from peers in the US. There's a number of amazing impact funds, VC funds in the US that kind of pioneered how to invest for maximum impact. And that's kind of where we got our three key screening criteria for impact, which is the embedded, measurable, and founder intent, because they each solve the problem of integrity, making sure you're creating an impact, you can measure it. And the founder intent side solves for the fact that startups are an evolving beast. And so having somebody who's always making the impact decision rather than making the commercial decision will lead to scaled impact and making sure that impact remains embedded into the business model. So that's kind of how we're similar. How we differ is we really see ourselves as an ecosystem driver. So we have done and are doing a lot of work around building tools and resources that we use for impact measurement internally and helping our portfolio companies maximize their impact and achieve their impact ambitions. We really try and release those to the world as we learn them, because we see a big part of our role is shifting more commercial dollars into the impact space, whether it's with us or not with us. It kind of, for us, we are looking at the broader picture and seeing ourselves as a small puzzle piece that can help shift the dial.
People's perception and regard for your company is very positive. Do you think because you've been sharing information and being a much more of a supportive ecosystem supporting role, do you think that really helped?
Yeah, I think that as a baseline, people respond well if you are saying that you are trying to solve some big problems that people care about.
Yeah.
They're like, I think we've got a little bit of an advantage in being able to talk about things that people really kind of emotionally respond to quite well. That is one part, but it's definitely not enough to build long-term relationships in this space. For us, we filter through what we do through a whole lot of values, which I won't go through each of them because they take too long. But two of them in particular, I think, are related to this. The first one is that we always play the long game, which means that we realize that the way that we want to be in the world and the way that is going to be most beneficial to us in the world are actually linked, where the most important thing in venture is building great relationships over a very long time. So we're talking about decades, not days. And so if you play the short game, you are going to do things that make people not respond to you that well. You're going to be overly aggressive and pushy and extractive and try and win every transaction that you have with somebody. And so I think playing the long game has really helped us there. I think the other value that is really important and fairly self-explanatory is just being human and realizing that other people are just humans like you, going on the same journey. We have released a whole lot of tools. We hope that they've helped people, and I think like the response that we're getting shows that they've been useful. But all of it comes back, I think, to those two values of why we've been able to build up a really positive network in Australia so far.
So is the structure of your company as an impact VC firm different to a mainstream VC firm?
Not functionally, I would say. Every VC has its own nuances of the structure, but broadly, the structure is you'll have a partnership with a number of partners that are the key decision makers on the fund, and then you'll have the people who are helping them. So people like me who are kind of supporting the partners in their decisions. So structurally, it is very similar to the way that most VCs are structured. I think the difference is that when we raise money, our investors are investing with us on the expectation that we are delivering both a financial and an impact result. In our mandate, in our kind of agreement, if you will, with our investors, that is enshrined, which I don't think it would be enshrined in a commercial VC.
So I just want to imagine, just say I'm a promising startup and say, Charlie, please invest in my startup. And can you walk me through what happens? So just imagine I'm successful going through the stage gates. What happens first? So I give my pitch to you. What goes through your mind and what are the processes?
We have a process at Giant Leap that is fairly similar to most VCs, where you'll go through a really top of the funnel screen as a investor in the company that you're working with. You'll work through, if criteria are met at certain gates, you'll move through the process, and the end of that process is, signed documents and an investment. And so at the very top of the funnel, just to give you a sense of the numbers here that we're dealing with, and it'll link to the criteria that we use at this stage, we'll see over 1,300 deals this year and review 1,300 pitch decks. So at that stage, we are really just asking for a pitch deck, because we can't speak with 1,300 people a year. It's just physically not possible. And so it always needs to start with a pitch deck. We will put the pitch deck through very high level questions internally to determine whether or not it progresses to the next stage, where we seek a founder meeting. And obviously the first question there is, does it pass the impact test at a high level? So is there some embedded impact linked to every dollar of revenue generated? Is it measurable? And the founder impact intent, we don't really make that assessment yet. That's once we meet them. But about 30% of deals, or 30% of pitch decks we see, are immediately knocked out at the top of the funnel because they aren't impact for one reason or another. The next question is really around, at a high level, do we believe that a 10x return is possible with this business? And that filters down into questions like, do we believe there is an enormous market opportunity that is there for the taking? It's a gap in the market that can be filled. Is the business coming at this market with a really compelling value proposition, the most compelling solution to a really painful problem? Is the team the right team to drive the business forward and kind of take it through this 10-year journey at least, or in a lot of cases, last that long? Are they the right team with the right experience and resilience and all of the things to do it? And if it passes those two tests at a high level, we'll then seek a founder meeting, explore a little bit further, actually meet the founders, make an assessment of whether they care about the impact, learn a bit more about how they're thinking about the key risks of the business, and actually start building that trust between the investor and the founder that needs to be built over the due diligence process. And things kind of go on from there. The high level questions that we ask at the pitch deck are really the things that guide us throughout this process.
Just say, okay, I'm successful. I aced all your questions and criterias. You funded me. Do you then play a role in terms of helping the company to structure their company, or helping them to embed impact into their company? What's that like?
Yeah, so we do a lot of work. We don't expect our founders to have all the answers when it comes to the impact of the what they're doing or the impact of the how they're doing it. We do a lot of that work in the background when we're doing due diligence on the companies. And so once we've made an investment, we'll basically sit down with the founder and talk them through how we were thinking about their company, and combine that with how they are thinking about their impact ambitions, and come to a agreed understanding of what the overall objectives of the business are from an impact standpoint, and how they're going to be measured. That's a standard thing that we do with every single portfolio company. On the support side, our head of impact is a person called Dr. Erin Kuo, who's an extremely lovely, intelligent person who has literally a doctorate in social impact. So she is the expert, and we lean on her for a lot of help around how we think about how we measure impact for our portfolio companies. And so our portfolio companies, if they want to kind of deepen their impact thinking, we have a number of resources like Erin who can come in and help them with questions that they have. That is kind of on the what side of things. On the how they do business side of things, we're also building out a suite of tools to help organizations to think through the big questions. So sustainability, diversity and inclusion, supply chain, in an environment where there's quite a lot of competition for talent right now. And so these are things that businesses are thinking about in order to compete in the competitive talent market. We're helping our businesses to do this, not just because it is impactful for them to run their business well and ethically, but also because it helps them to achieve financial outcomes, because they're able to attract better people, better talent to their organization.
Now I am tracking along and I'm doing great. So I now need to scale my company. And I think as companies grow, there are more pressures, reducing costs maybe, drive growth, looking at pricing, maybe looking at offshoring some of the activities to reduce my costs. What are some of the things that you do or you think about that can help a company to stay on track, stay on their impact goals?
We do help organizations think through those problems,
Mm.
but just kind of taking a step back to the initial characteristics that we look for in a company that meets our impact mandate. Because we're only investing into companies where the impact is embedded into the business model, so every single dollar of revenue generated is linked to that unit of impact.
Mhm.
Part of the reason for that is that when companies come against tough decisions where they're wondering whether to go into this market or this market, if the impact is embedded into the business model, it doesn't matter or it shouldn't matter what decisions they make down the line, because they're always going to be generating impact if they're scaling their business. That's the intention, but it comes out in so many permutations of the decisions that companies have to make. And some of the decisions are really tough, particularly where the decisions get tough from an impact standpoint, is less about the what the business is doing and more in the how the business is doing things. Because occasionally it is actually a cost to run your business in a more ethical way. And so we do always provide the support for founders. And I think it's really important as an investor to give founders the permission to make the more impactful decision and not be the investor who's constantly going for short-term profit, short-term goals. Helping the founders also take the long-term view in those situations can be really helpful, because that is I think the unique perspective that impact investors bring, is we are looking at the long-term goals, not the short-term goals. So lengthening out the game that founders are looking on is something that we always try and help with.
I think majority of founders go into building a wonderful venture. They obviously want to change the world for good. Sometimes, especially when innovation is so new, sometimes we just have unintended consequences, right? And I'm wondering, what is the role of a impact investor in helping to guide companies in those kind of situations, especially if you're very successful, everyone's using your products and services, and then you realize all these things you didn't think about.
Mm.
There probably isn't a clear answer. I'm just interested in hearing what you think about that. How can we lessen those kind of situations?
Yeah, it is hard and inherent to impact. Thinking through first order impacts is easier than thinking through second order impacts is easier than third and fourth and fifth. We're in an incredibly complex world. You can only make the decision based on what you know, but it is beholden to the investor and also the founder, if they've got impact ambitions, to think through as much as they can what those potential unintended consequences might be. So after we've looked at a pitch deck, met the founder, we think there's a strong impact case, we'll actually go through a process of calculating what we think their impact score is using a set of questions, one of which is, what is the risk? How high is the risk of unintended consequences?
Oh.
And so we have come across businesses where the impact score would be high, if not for there's this really massive risk of something here that could go wrong. And I'll give two examples. One is a negative outcome and one's a positive outcome, just to show that it goes both ways. So the first example of a negative unintended consequence is a company like Juul, which makes e-cigarettes. They're a vaping company, and that actually had a number of impact investors invest into their early rounds because they were marketing themselves as going to solve the smoking crisis. We're going to get people to stop smoking tobacco, start smoking this healthier e-liquid. Everyone's healthier and everyone's happier. What they didn't realize is down the line, these cheap, accessible, cleaner products were going to be accessible to juniors and extremely popular with juniors who were using them with nicotine and getting addicted to nicotine, but just through a different format. And so huge unintended consequence. I don't think the founders or the investors thought that was going to be the case, but that's kind of how it played out. You can take that lesson as an investor and as a founder, look at kind of what happened in that case and really add that to the toolkit of things to think about when you're starting a business. Is there kind of a market that might pick this up that is going to generate a whole new problem such as nicotine addiction in young people. And then on the other side, a company called Change Foods, Giant Leap has invested in, they make cheese using microbes in silos. So it's animal-free cheese. They feed yeast to the microbes who turn it into cheese proteins, and it uses 5x less energy, 10x less water, and importantly for the unintended consequence, also uses 100x less land. The immediate impact of the business and the direct impact of the business is that every cheese product that they produce has a much lower energy and water consumption profile, but they may disrupt the cheese market in such a way that there's a whole lot of land that it doesn't need to be used. And so what does that land get used for? It's not something that Change Foods has any control over, but potentially the result of that is quite positive, and it's an unintended positive consequence where that land is freed up to be used for reforestation or takes pressure off an industry so they can shift to more regenerative practices.
If a startup is fantastic, but you can also see that unintended consequences is going to be also quite terrible if it happens, does that actually mean that you wouldn't invest in that startup as a consequence?
Yeah, it does. If we believe that there is substantial catastrophic risk, the thing about the unintended consequences is it's on a scale where you might have this much positive impact, and then the risk of unintended consequences might reduce your net impact to down here. So you might still have a positive net impact. And so I think that needs to be considered. There's never been a case where we've seen been really excited about the impact, but saying there's some really terrible potential unintended consequence. I think those kinds of businesses fall out a bit earlier than kind of getting to that stage if we can see something really obvious. But there's definitely businesses where when we've talked through it, and it is a process of looking at the business from lots of different angles, and it helps to have lots of different people discussing it and all giving their view on this. There's definitely been cases where we've become less excited about a business's impact because of a risk of an unintended consequence. So certainly that does have an effect. This feeds into our approach to decision making, where we are conviction led on commercials. So we have a threshold where we don't need everybody to agree that there's a commercial opportunity. We only need a certain number of people to agree. And that's because we realize that we see things differently, and you have to be contrarian sometimes to generate a financial return. You have to see something that other people don't see. But with impact, we are not conviction led, we are consensus led, where we need everybody to be on the same page that this is enough impact, and every single decision maker has the ability to say no on an impact basis, and that will end the deal. If somebody feels that there is that risk of an unintended consequence and they feel like that risk is high, that single person has the ability to stop the deal from going ahead. It is not about being contrarian when you're trying to create things that are for the greater good. It actually helps to have as much diversity of perspectives and to listen to as many diversity of perspectives to identify what things are going to be the best for everybody.
I mean, how much does your insights come from internal people, like such as yourself going and doing lots of research, versus accumulating knowledge from your relationships around you and your broader network?
We benefit a lot from our network in all sorts of ways, particularly when we're trying to generate maximum impact. For us, we benefit a lot from drawing on people around us. So we have an incredible advisory board, an incredible community of investors as well. I think a lot of our views are try and draw on those different perspectives to bring them into our decision making. For an impact investor, you are working to strengthen community, and you get strength from community in that way.
To close off, we spoke about 3 questions. The first question is about your personal transformation. So the question goes, tell us the story only you can tell.
So the story that I can tell is one that I feel like kind of a lot of people may have experienced a similar dimension in their lives, but this is kind of how it relates to me. I feel like there has been so much luck in my life that has been drawn from quite painful situations. And so my answer to this question wants to kind of like run through in maybe just some appreciation of the luck that I've experienced. And so the first one was I'm actually a Sydney local originally. I'm currently living in Melbourne. I had a plan when I left school just to stay in Sydney, stay with the same old friend group, and go to the university that kind of everyone was going to in a very kind of linear path. Then I went overseas and I tried cliff diving in Croatia, and I slipped off the rocks and fell quite away and broke my leg quite badly. And so I spent my year off between school and university on a couch, looking and feeling very miserable. As a result of that 6 months of looking at other people either having an amazing time or progressing into university and getting on with their lives, I felt that I needed to shake something up. And so that was the whole genesis of coming to Melbourne and making quite a big change in my life, came from that painful situation of sitting on that couch feeling very miserable. And I've been in Melbourne for 9 years now, never looked back, and feel like there's so much that I get from being here. The second lucky moment, I think, was when I started working, and I was a little bit lost and uninspired by the corporate world. I just was looking at a whole lot of middle managers who weren't excited about what they were doing. And I was like, why are you doing this? It's such a long journey to be miserable. And my partner was actually working at this co-working space. And so I had the ability to spend time at this co-working space because I had the excuse of my partner works here. And that meant that I was meeting founders and I was seeing the difference between the excitement levels of someone in middle management versus somebody who is founding a business. I felt was a very lucky thing to happen and led to me coming into the startup world. And then the last lucky moment was actually joining Giant Leap. And I was going through a bit of a career wilderness. I knew that I wanted to help founders, but wasn't quite sure what the best way was. I also, at one point, I was thinking I need to go back to the corporate world, go and get some real world skills, and then I can come back and I can really help founders with some experience. Then I came across this company called Giant Leap, and Giant Leap was hiring an analyst, and they were using this platform called Applied, it's actually one of our portfolio companies, and it removes unconscious bias from the hiring process. So you don't see somebody's CV and you don't see their name or gender or anything like that. Through that process, I made it through the initial process, and then obviously the happy ending here, spoiler alert, is I got hired. But I was coming into that role, not really a traditional experience either that would lead me to VC. And I don't think that if Giant Leap hadn't been using Applied, that I would have gotten past the CV stage. And so it was the first time they were ever using it as well. So just like an incredibly lucky thing that they were using it. Mm-hmm. And so, yeah, there's all these painful moments in my life that have led me here that I just have so much appreciation and gratefulness for.
Looking back from the time when you fell down the rock and laid there on the couch for that long, compared to now, how are you different from back then?
I look back at that person and feel like I just want to reach through time and tell them that they will find a direction. There was a lot of the overwhelmedness and the anxiety of, am I going to find something that I get really passionate about? All of those things weren't quite settled in that person. And so I think I am a much more settled, confident person now. And yeah, I just want to tell them it's going to be okay.
Mm-hmm. And I'm glad you're in Melbourne, and being a Melbourne person, I just have to say, obviously, you wouldn't move back. I just have to get it in there.
Yeah. I'm not that beachy, and so that eliminates one of the main value propositions of being in Sydney.
I mean, I did enjoy Sydney too, but Second question is, teach us a lesson only you can teach.
So I think this somewhat relates to the story that only I could tell. I think I could teach the class titled The 101 on Pulling Levers. And it's not an original thought piece. This is just, I want to package it up into a lesson. The concept is that in computer science, there is a theory of explore versus exploit. And it uses the allegory of, imagine you are in a room with 100 pokie machines, all with levers, and they all pay out different amounts. If you want to maximize your profit from being in that space, how would you do it? And the explore versus exploit comes into it when you have a time limit. So you've got 1 hour, 100 pokie machines, each randomly generating either $0 profit or $100 profit. How do you spend that hour to maximize your profit in being there? And you can either explore on one end for an entire hour and just pull every single lever, and you'll get like an average amount of profit. Or you could exploit, which means that you just focus on one machine and you just pull that one lever the entire time. And you might sit on the one that's the most profitable, or you might sit on the one that's the least profitable. What this theory tells you is that the optimal way to get the most out of the scenario is actually to spend a portion of the first period exploring, so trying a number of machines, and then the next half going back to the one that was the best, and just pulling that one for the rest of it. So you will explore a little bit and then exploit towards the end. And I think that this is very relevant to life and career. And I don't think that we spend enough time pulling levers. I've seen it happen very often where people spend a lot of time doing one thing because they think they're on the right track, but they don't really try lots of different things. And so they might be pulling the lever that gets them the maximum profit, but they might be right down the end and just not know it. It's not just about monetary profit, mind you. It's like emotional, soul nourishing work in addition to work that gets you the financial benefit that allows you to live the life that you want to live. So I would like to teach that lesson of like how to expand your horizons beyond just specializing in that critical, like early 20s period of your life. A corollary lesson I'd love to attach to this is when to close the book, which is, I think a lot of people, they get stuck in a sunk cost fallacy where the allegory is you open a book, you get 50 pages in, and you're not really enjoying it. Do you continue because you've started it and you've spent this time on the first 50 pages, or do you close the book? And I think it is so important to pull the lever or open the book. I know I'm getting my metaphors confused here, but don't feel like if you're not feeling it, like really listen to those signals and put it down if it's not working for you.
Yeah, I feel like that lesson is very relevant for, I mean, regardless of who you are. So I think there are two key decisions really, whether you have the courage to start something and also whether you have the courage to close something. And everything in between, obviously, is through hard work and see how you go, right? So that's a great lesson. Okay, now the last question, we have come to the end, is your vision for 2050. And the question goes, in Vision 2050, what would you hope it to look like, feel like, and sound like?
What does it look like? I think the color green is huge in my mind for multiple reasons. I believe there will be a renaturation of our lives. We will see more green cities powered by renewable energy, with urban gardens that are feeding us and shading us, populated by people who are happier and healthier, because you actually have a happiness reaction to the color green. It's ingrained into human psychology. So I think that will be a very important part of what it looks like. I think what it feels like a more cohesive society, not just on a local scale, but also on a global scale. And I think the reason for that is that if we get to 2050 in decent shape, we will have solved one of the most existential crises facing the global population. I feel like there will be more empathy between people, and that may translate into stronger global institutions and more acceptance of kind of regulated capitalism, where you've got protected areas of the ocean where there's no fishing zones, and biodiversity protection are things that are not seen as kind of a cost. They're seen as, no, this is like how we survive and how we live in the planetary bounds. And then I think the last thing is we will have learnt how to adapt in a way that I don't think we have any concept of yet. There is a there's kind of always the two extremes of the future are utopia or Mad Max style desert. And I think we're going to be somewhere in between, not in a kind of disaster minded way, but I think that we are going to be dealing with a more volatile environment, both from the climate and also the technology that needs to be produced and all of these things. And so I think we will be living in a society that has learned how to adapt much more quickly and effectively than we are today.
Hmm. And what role would you have hoped to play in that future?
So I would love to have contributed in the maximum way that I can. And I think the big leverage points that I see are capital. So like impact investment generally is kind of a leverage tool to create those futures. I also think startups are just a massive leverage point. You have these, for all the reasons I've already talked about, they are an incredibly powerful tool to scale impact solutions. So if I've done work in that space, I feel like I would have contributed. And then of course, just if people see what you've done and they believe that that is a good way to go, then hopefully they'll follow. So if I can inspire another generation, both younger than me and older than me, to come into this space, that will have been a success as well.
I would like to thank you for taking the time to share your insights and to give us a bit of a peek into the world of impact VC. I'm sure that people who are listening who work in policy or research and startups, I know that a lot of them want to actually understand how your world works. Thank you so much.
My pleasure. Thank you so much for having me.